U.S. core inflation climbs 3.1% in July as service costs rise. Washington, U.S. consumer prices rose at a moderate pace in July, but a jump in service costs and certain goods tied to tariffs pushed the core measure of inflation to its largest increase in 6 months. The Labor Department's Consumer Price Index, CPI, showed overall prices up 0.2% from June, following a 0.3% rise the prior month. Gasoline prices fell 2.2%, helping limit the headline increase, while food prices were flat. Grocery costs dipped 0.1%, as a steep 3.9% drop in egg prices offset higher beef and milk prices. On a 12-month basis, the CPI rose 2.7%, matching June's annual pace. Core CPI, which excludes food and energy, climbed 0.3% on the month and 3.1% from a year earlier, up from 2.9% in June. The monthly core increase was fueled by a 4% rebound in airline fares, higher healthcare and dental costs, and price gains in household furnishings, footwear, and auto parts. The inflation report is unlikely to shift expectations that the Federal Reserve will cut interest rates in September, given signs of a cooling labor market. However, economists warned that recently imposed tariffs by President Donald Trump could push prices higher in the months ahead as goods imported under the new duties reach store shelves. Concerns are also growing over the reliability of inflation and employment data following budget cuts at the Bureau of Labor Statistics (BLS). Earlier this month, BLS Commissioner Erica McIntyre was dismissed after July's jobs report showed sluggish growth. Trump has nominated Heritage Foundation economist E.J. Antoni, a critic of the agency, to lead the bureau. Due to staffing and funding constraints, the BLS has suspended CPI data collection in one city in each of Nebraska, Utah, and New York, and reduced collection by 15% in other areas. To fill gaps, the agency has increased the use of different cell imputation, a method that draws prices from broader geographic areas. That method accounted for 35% of CPI data in June, up sharply from 8% a year earlier, a change that economists say may increase volatility even if it does not bias results. The Fed's preferred inflation gauge remains slightly above its 2% target, and officials have kept interest rates at 4.25% to 4.5% since December.